If you're considering a 1031 exchange and want to know what the bottom line is, this video is for you. Today, we're breaking down the essential elements that you need to know about a 1031 exchange. The primary purpose of a 1031 exchange is to defer capital gains tax. This allows you to reinvest the proceeds from the sale of your property into a new investment without immediate tax burden. Any real property can be exchanged in a 1031 exchange. This includes residential, commercial, and even vacant land. The properties involved must be held for investment or used in a trade or business. They do not have to be of similar use, giving you flexibility in your investments. A 1031 exchange consists of two parts: the transfer of your relinquished property and the acquisition of your replacement property. To achieve a fully deferred exchange, certain criteria must be met. The taxpayer must purchase a replacement property or properties of equal or greater value. The taxpayer must reinvest all the proceeds from the sale of the relinquished property or properties. And the taxpayer must reacquire debt equal to or greater than the debt paid off from the relinquished property, or replace that debt with additional cash. There are two critical deadlines that must be adhered to, all starting from the date of the transfer of the first relinquished property. The replacement property or properties must be identified within 45 days, and the exchange must be completed by earlier of 180 days from the date of that first relinquished property closing, or the due date of the taxpayer's federal income tax return, including any extensions. Replacement property must be unambiguously described, made in writing, and signed by the taxpayer. The two most common identification rules are as follows: the three property rule, in which up to 3 properties can be identified regardless of their fair market value, and the 200% rule, in which any number of properties can be identified as long as their combined fair market value does not exceed 200% of the fair market value of all relinquished properties. The taxpayer must acquire title in the replacement property in the same manner as title was held in their relinquished property. There are some exceptions to this rule, such as entities that are disregarded for tax purposes. By understanding these key points, you can better navigate the complexities of a 1031 exchange and make informed decisions about your real estate investments. If you have any questions or need assistance, please give us a call and we will be more than happy to help.